Are you worried about how inflation could erode your hard-earned savings? You're not alone. With the rising cost of living and unpredictable economic conditions, many retirees are looking for smart ways to protect their wealth. One powerful strategy that often gets overlooked is using real estate investment trusts, or REITs, as a hedge against inflation. In this video, I'm going to show you exactly how REITs can help safeguard your money from inflation and why they might not be your best option compared to other alternatives. But first, if you're serious about protecting your wealth in the next 2 weeks, click the first link in the description to get your free gold IRA guide. Thousands of Americans are opening gold IRAs to protect their savings, and you can too. Now, let's dive into why REITs are often talked about as an inflation hedge. Real estate has historically been a solid investment during inflationary periods. The reasoning is simple. As inflation rises, so does the cost of goods and services, including the cost of renting or buying property. When property values and rents go up, the income generated by REITs typically increases as well, helping to keep pace with inflation. That's why many see REITs as a natural hedge against inflation. However, it's not all sunshine and rainbows with REITs. While they can offer income from property investments, they are not immune to volatility. Economic slowdowns or rising interest rates can negatively affect the performance of REITs. And, unlike gold IRAs, they are still tied to the stock market and can be subject to unpredictable market fluctuations. So, if you're thinking about using REITs to protect your wealth, it's important to be aware of these risks. But if you're looking for the ultimate safeguard against inflation, a gold IRA might be your best bet. Gold has always held its value during times of inflation and economic uncertainty. Unlike REITs, gold is not tied to the stock market, so it can protect your wealth when everything else is going down. If you're thinking about diversifying your portfolio with real estate and want the added benefit of stability and inflation protection, I highly recommend you consider adding a gold IRA to the mix. It's the perfect complement to your real estate investments and can help further insulate you from economic turbulence. Now let's break down why REITs alone might not be enough. If you have significant wealth, especially if you're a retiree with over $100K in an IRA or 401K, you need more than just property investments to shield your money. While REITs might offer some protection, they still carry risks that can be mitigated by diversifying into gold. When inflation rises, the value of your gold tends to rise, providing you with a reliable and safe option for wealth preservation. Real estate investments, while valuable, are not always liquid, and they can take time to yield returns. On the other hand, gold has proven time and again that it's an asset that can be easily liquidated when needed. This is crucial for retirees who may need quick access to their savings, especially in uncertain times. As an American retiree, you're already in a position where protecting your nest egg is critical. If you want to secure your wealth for the future, you can start by opening a gold IRA. It's a powerful way to protect your savings from inflation, market fluctuations, and economic instability. If you're serious about securing your wealth and want to know how you can start today, click the link in the description for your free gold IRA guide. This guide is especially helpful for retirees with over $100K in their IRA or 401K. And if you're sitting on more than $5 million in savings, it's time to make sure your wealth is protected. Gold IRAs have become the go-to option for American retirees looking to preserve their wealth, and for good reason. If you want to learn more, don't wait. Get your free guide and take the first step toward protecting your financial future today.